All right, so hey everyone, and welcome back to the Deep Dive.
Glad to be back.
Today, we're going to dive into something that really caught my eye last week.
Yeah.
Friday, specifically in the Indian stock market.
Right.
It was like fireworks or something.
Oh, yeah. It was crazy.
The NIFTY 50, I mean, it just shot up.
Huge gains.
Like 475 points.
Wow.
Over 2% in just one day.
Yeah.
Hitting this like peak of almost 23,000.
22,874 intraday.
And the Sensex, the BSE Sensex.
Yeah.
It wasn't sloshing around either.
No.
Over 1,400 points it surged.
Yeah.
Touching 75,319.
It's impressive.
And even the bank Nifty jumped like, 826 points?
51,066 it hit.
But here's the thing.
What's that?
It wasn't just like a few big companies driving this whole thing.
Oh, yeah.
The whole market was on fire.
I saw that.
You look at the BSE small cap and the mid cap indices.
Yeah.
They were showing some pretty hefty gains too.
Absolutely. Broad market participation.
So today what we're going to try to do is figure out why.
Yeah.
Like what happened on Friday that gave the Indian market this like massive boost?
You've got a bunch of expert analyses.
Yeah, like a whole stack of reports here.
A lot of opinions and some news reports too.
All trying to make sense of it.
Trying to connect the dots.
And it looks like we've got quite a few pieces to this puzzle.
Oh, yeah. It's not simple.
So let's just dive right in.
All right. Let's do it.
So one of the first things that jumps out from what I'm seeing is that it wasn't just something happening within India.
Right.
There were some international factors at play too.
Oh, absolutely. Global events definitely played a role.
We're talking about the U.S., right?
Yes. Specifically, Trump's latest move on those tariffs.
Yeah, those tariffs on India.
Right.
It seems like that was the first spark.
Yeah, that's what most of the reports are pointing to as the immediate catalyst.
Okay, so remind me again, what exactly did Trump do?
Trump announced a 90-day pause on those 26% tariffs that had been in place for India.
So bit of a break for India.
Yeah, a temporary reprieve.
And that just seemed to flip a switch in the market.
That's what it looks like from the data.
Everyone's suddenly feeling much more optimistic.
Yeah.
Like someone just opened the windows and let in some fresh air.
Exactly. A wave of relief and optimism swept through the market.
I saw one analyst, Sugandha Sidekeva from SS Wall Street.
Yeah.
She basically said the same thing.
Right.
That the rally was largely driven by this unexpected pause. But it wasn't just the pause itself, was it?
No, there's a little more to it.
I think one of the reports mentioned a specific exemption
right.
for Indian exports to the U.S.
within this 90-day window.
So it's like, okay, we're hitting the pause button.
Yeah.
But we're also going to let you keep sending us these specific goods.
For now.
Yeah. And that seems to have really fueled that buying frenzy.
I think you're right.
Right on Friday morning.
Especially in those sectors that benefit from those exports.
I was looking at what Avinash Gorakshkar from Profit Mart Securities had to say.
Oh, yeah. He had some interesting points.
He really emphasized that point.
Yeah.
That this carve-out for Indian exports was a huge factor in driving those gains.
Absolutely. It signals that even with the broader trade tensions still simmering, some parts of the Indian economy are getting this sort of temporary shield.
Like a little bit of breathing room.
Yeah, exactly.
And it's interesting because Gorakshkar also brought up something else. The Indian External Affairs Minister has been saying that trade negotiations with the U.S. are still ongoing.
Right.
And that they're expecting a pretty significant breakthrough within these 90 days.
Oh, wow. So they're optimistic.
So it's like the market isn't just relieved about the pause.
Oh, no.
It's actually starting to price in a positive outcome.
Yeah, they're looking ahead to a potential deal.
A more lasting resolution to these trade tensions.
Long-term agreements.
Okay, exactly.
Gorakshkar even said that the market is expecting a breakthrough in Indo-U.S. trade negotiations within the 90-day tariffs pause.
So it's like this anticipation of a positive resolution is really driving this bullish sentiment.
It's a powerful force.
Okay, so we've got the immediate impact of this tariff news.
Yeah.
But there's this other angle that I keep seeing top up, this idea of sell China, buy India.
Oh, yeah, that's a big one.
That's a pretty bold statement.
It is.
What's fueling that kind of thinking?
So it's partly driven by the fact that while India got this tariff pause, China didn't.
They got left out.
Completely excluded from any exemption.
So the logic here is that foreign institutional investors, those big global players,
the FIIs,
might start shifting their focus away from China and towards India.
You might see India as a safer bet
Yeah.
Less burdened by tariffs?
And just a more stable option overall.
Potentially.
Avinash Gurashkar, he was talking about this too.
He was.
Saying that this could definitely encourage FIIs to rethink their strategies.
To diversify their portfolios.
And look for opportunities outside of China.
Exactly.
But it's not just about tariffs. Right.
No, there's a bigger picture here.
I was reading what Sandeep Pandey from Basav Capital had to say.
Oh, yeah, Pandey.
And he brought up a really interesting point.
What was that?
He's talking about a growing discomfort globally with this over-reliance on China.
Oh, I see.
He used the example of the semiconductor chip shortage.
During the pandemic?
Exactly.
Right.
It showed everyone just how risky it can be to depend so heavily on one country.
For essential supplies.
And especially a country with...
political differences?
Yeah, political differences.
Yeah.
And a different system of government.
And potential geopolitical risks.
Right.
And Pandey's point is that this has really pushed for more diversification in supply chains, investment portfolios, everything. Countries like India.
Especially with its democratic system, as Pandey pointed out.
Right.
Are being seen as more dependable alternatives.
More reliable partners. Yeah.
So this isn't just a knee-jerk reaction to tariffs.
No, it's deeper than that.
It's a fundamental shift.
In global thinking.
In how the world sees risk.
Yeah.
And India is benefiting from that.
They're seen as a key player in this new diversified world.
Okay, so we've talked about the global side of things.
The international factors.
Let's shift gears a bit and look at what's happening domestically.
Okay.
One of the big things that everyone's pointing to is the RBI's recent move.
You mean the repo rate cut?
Exactly.
Yeah, that was a big one.
How did that play into this market jump?
So the Reserve Bank of India, they decided to cut the repo rate by 25 basis points.
Okay, so for those who might not be familiar with that term, we're talking about 1/4 percentage point.
Yeah, a small but significant change.
And that can have a real impact on borrowing costs.
Absolutely. It affects how much it costs for businesses and individuals to borrow money.
So this move basically sends a positive signal to the market.
A signal that the RBI is committed to supporting growth.
Right.
And they're comfortable with the current level of liquidity in the economy.
Anshul Jain from Lakshmi Investment and Securities, he pointed out that this rate cut is likely to encourage banks to announce their own interest rate cuts.
Yeah, which would further reduce borrowing costs.
And that can really stimulate economic activity.
Absolutely, makes it cheaper for businesses to invest.
And for consumers to spend.
Exactly.
And Jane also mentioned that this move helps to ease concerns about a potential liquidity shortage.
So basically, it reassures the market that there's enough money circulating.
Enough fuel for the engine.
To keep things running smoothly.
And that, in turn, encourages investment.
It boosts confidence. And reduces the fear of a credit crunch.
And on top of that, the RBI is also projecting a 4% inflation rate for the financial year 2026.
Which seems to be giving the market even more confidence.
Yeah, that's a good sign. So they're basically saying, we're going to keep inflation under control.
We've got this.
Which means we don't have to aggressively hike rates.
Which could potentially stifle growth.
Right, so it's like this perfect balance.
Yeah, sweet.
Growth potential without the threat of runaway inflation.
It's a good position to be in.
Okay, so we've covered the trade developments.
Yep.
The RBI's rate cut.
The domestic factors.
But let's go back to the U.S. for a second.
Okay.
Because it's not just about this tariff pause.
No.
There are reports that India is actually negotiating a much broader trade deal.
A comprehensive agreement.
With the U.S.
That's right.
Have you seen anything about that?
Yeah, it seems like those talks are definitely happening.
And it's not just speculation.
No.
The U.S. Secretary of the Treasury, Scott Bessent.
Right.
He specifically mentioned trade talks with China's neighbors.
And explicitly included India in that group.
So it's like a deliberate strategy.
To engage with countries in the region.
And to diversify their trade partnerships. And it looks like India is putting some concrete proposals on the table.
Oh, yeah.
One of the reports mentioned India potentially lowering tariffs on automobiles in exchange for U.S. concessions on agricultural products.
That's a big deal.
Yeah, it's a pretty significant give and take.
It shows that India is serious about reaching a deal.
And those are two major sectors for both economies.
Automobiles and agriculture.
So any agreements there would have a huge impact.
They could reshape trade flows between the two countries.
Okay, so we've got the trade stuff.
The tariffs, the negotiation,
the RBI's move,
monetary policy,
global investors shifting their views
away from China.
But what about the currency markets?
Oh, yeah, that's another piece of the puzzle.
I think our source mentioned a stronger rupee,
right,
and falling oil prices,
contributing to the rally.
How do those factors come into play?
So the rupee appreciating against the dollar, it basically makes investments in India more attractive.
For foreign investors.
Exactly.
Because their holdings in Indian stocks and bonds become more valuable when they convert them back to their own currency.
That's like a bonus.
And then you've got falling oil prices.
Yeah.
Which is great news for India.
Especially since they're a major oil importer.
It reduces their import bill.
And helps to manage the current account deficit.
Because they're spending less on oil imports.
Right.
With Brent crude around $63 a barrel.
Yeah.
That's a pretty significant tailwind for the Indian economy.
A big boost.
Okay, so we've covered a lot of ground here.
A lot of factors.
But there's one more thing I want to touch on.
What's that?
Our source mentioned something called short covering by bears.
Oh, yeah, that's a bit more technical.
Can you explain that? What does that even mean?
So short selling is basically when investors bet that the price of a stock
or an index is going to go down.
They borrow shares, sell them, hoping to buy them back later at a lower price.
And pocket the difference. But when the market unexpectedly surges,
like it did on Friday,
those short sellers, they suddenly face potential losses.
Big losses.
So to avoid those losses, they rush to cover their shorts.
By buying back the shares they borrowed.
And that sudden wave of buying adds fuel to the fire.
It pushes prices even higher.
Creating this snowball effect.
Yeah.
Avinash Gorakshkar pointed out that the market closing lower on Wednesday, followed by strong buying in global markets on Thursday, probably led to a lot of those short positions.
Which then got covered when the Indian market reopened on Friday.
So it's like, imagine you're caught in the rain without an umbrella.
Okay.
And everyone else suddenly opens theirs.
And you're scrambling to find cover.
That's a great analogy.
It's like a mad dash to catch up.
Okay, so one last piece of the puzzle before we look at whether this rally can continue.
Okay.
There's this anticipation of better Q4 FY25 results.
Yeah.
Especially from the banking sector.
Right.
What's driving that optimism?
So part of it is tied to the RBI's rate cut.
Right.
As Anshul Jain mentioned, lower interest rates can potentially improve the net interest margins for banks.
Okay.
And Sandeep Pandey also noted that there's sustained industrial demand.
So businesses are still borrowing.
Which means banks are lending.
And making money.
Exactly.
And on top of that, the 90-day tariff pause, it gives Indian companies a bit of a break.
Some breathing room.
To prepare for those tariffs if they do eventually come back.
It gives them more time to adjust.
So it's like they get this temporary boost to their bottom line.
Yeah, they don't have to set aside as much money for potential losses.
Okay, so we've got this incredible confluence of events.
A lot of factors coming together.
Trump's tariff pause.
Yeah.
Hopes around Indo-US trade deals.
Right.
The RBI's rate cut.
Supportive monetary policy.
Global investors rethinking their exposure to China.
Seeking alternatives.
A stronger rupee. Lower oil prices.
Boosting the economy.
On short covering.
Technical factors.
And expectations of better corporate earnings.
It's a lot to digest.
It really is.
It's a perfect storm for the Indian market.
But the big question is, can this rally last?
Is this sustainable?
What are the experts saying?
Well, there are some differing opinions. Some are more cautious. VK Vijayakumar from Geojit Investments Limited.
Right.
He's one of them.
He's suggesting that this initial jump might not be sustainable.
Given all the uncertainty in the global markets.
Yeah, like things could easily change.
Exactly.
And he also raises a good point about Trump's motivation for the tariff pause.
Right.
He thinks it might be more about pressure in the U.S. bond market
than a real shift in trade policy.
So it's like
a temporary fix.
A Band-Aid solution, not a fundamental change.
So he's advising investors to be careful.
To prioritize safety.
To not get carried away by the hype.
On the other hand,
yeah,
MKI Global.
Right.
They seem to be more optimistic.
Especially in the long term.
They're saying that over the next 90 days, we could see a bunch of new bilateral trade agreements.
Yeah.
Which would lead to a global tariff situation that's only slightly more protectionist
than what we had before.
So basically,
yeah,
things might not be as bad as some people fear.
It might not be a trade war.
And they believe that this would prevent a deep recession in the U.S.
Though a mild slowdown is still possible.
Right.
But importantly for India, They think that company earnings estimates are bottoming out.
So things are starting to look up.
And valuations have corrected.
So stocks are more attractively priced. And the improved visibility of the U.S. economy is a good sign.
They believe smaller and mid-sized companies could outperform the larger ones.
So it's like two different perspectives.
Two sides of the coin.
Caution on one side, optimism on the other.
So what's the takeaway for investors?
What should they do?
Jitendra Gohil from Kotak Alternate Asset Managers.
Yeah.
He's suggesting a more measured approach.
Okay.
Don't just jump in head first.
Right.
Gradually build positions in select domestic-focused large-cap sectors.
Like banking, hotels,
hospitals.
Those kinds of things.
Yeah.
And look for mid-cap companies with good earnings visibility.
Especially during any short-term dips in the market.
And think long-term.
At least 12 months out.
MK Global also has some specific sector recommendations.
Yeah.
Overweight on IT and materials.
Underweight on FMCG and financials.
So it's about being selective and strategic.
And not just reacting to the hype.
So to wrap things up, we've seen this incredible day in the Indian stock market.
The huge rally.
Driven by a whole bunch of factors.
The global and domestic.
Trump's tariff pause.
Trade talks.
The RBI's rate cut.
Shifting investor sentiment.
A stronger rupee. Lower oil prices.
Short covering.
And anticipation of better earnings.
It's been a wild ride.
It has.
But whether it continues is still up in the air.
The experts have different opinions.
There's a lot of uncertainty out there.
So it's a lot to think about.
A lot to consider.
As you make your own investment decisions.
Exactly.
But it makes you wonder,
how about,
given all this complexity, what sectors or long-term approaches might be the most resilient?
As the global economy keeps changing.
It's a question worth pondering.
Definitely.
Thanks for diving deep with us today.
It's been a pleasure.
And we'll catch you next time.
See you then.